What's going on, my beautiful YouTube family? It's JB from Faith and Forex, about to give you another masterclass in conquering the financial markets and another insight into the life of our Lord and Savior, Jesus Christ of Nazareth. Low key, I might switch up the intro a little bit. It's quite a mouthful to say, but that's a topic for another day. So hope you guys been having an amazing day so far, an amazing week. We're going to go over what makes an amazing Christian, right? What makes the best Christian in the world, right? So we're going to speak about that on the biblical side. And on the trading side, I just want to speak about 5 components or 5 things that you need to have an absolutely amazing strategy. So without further ado, let's waste no time. Let's get into it. All right, so here we are. And I just want to, first of all, this is such an underrated verse. I never really see people talk about this. But if you want to know how to be the best Christian in the world, it's got nothing to do with how much you preach. It's got nothing to do with how good you are, your good works, how faithful you are, your prayers, what you do for everyone, how well you know the Bible. No, it's got everything to do with this verse. Let me read it for you. This is John chapter 6, verses 28 to 29. This is the disciples talking. Well, this is the disciples in this passage. Then they said unto him is Jesus, what shall we do that we might work the works of God? So this is basically the disciples speaking to Jesus. And Jesus answered and said unto them, this is the work of God, that you believe on him whom he hath sent. So all you've got to do the work of God is believe in Jesus, right? You just got to believe in Jesus. So what does that look like? Well, go and find out everything that Jesus spoke about and just believe in it. Follow it. Trust in it. Abide in it. Abide in him and him in you. And that's how you can become an amazing Christian, the best Christian in the world. That's pretty much it on the biblical side, kind of. But I just want to kind of illustrate that a little bit more, because you guys really need to read this. It is the most famous verse in the entire Bible. For God so loved the world that he gave his only begotten Son, that whosoever believeth in him should not perish, but have everlasting life. Right? We can't do anything to be called good Christians. There's no such thing as being righteous. Unless we've got Christ, of course we're made righteous by his blood. But in terms of us on our own, there's no such thing as good, no such thing as righteous, no such thing as perfect, no such thing as the best, because it even says in Isaiah, right, that our righteousness is as filthy rags. So to God, our righteousness is filthy rags. So it doesn't matter how much you do, it's still filthy rags. You're only good because he's made you good. You're only good because of the goodness that dwells within you, which is the Lord, right? So it's got nothing to do with how good we think we are, how can we be the best. It's got everything to do with following the Lord. Everything to do with following the Lord, right? So study the Gospels, study the books of the New Testament, learn everything you can about Jesus and just follow him and trust in him, because that's it. They said, what can we do? What are the works of God? The works of God, it says here in verse 29, chapter 6 of John, this is the work of God, that you believe on him whom he hath sent. So you believe in the one that, the Father sent, which is Jesus. And that is how you can be the best Christian in the world. You just trust Jesus with everything you have. And that's it. Let's go on to the trading. All right, I'm going to plonk myself right in the bottom left corner. You see that? I can move it around. It's so funny. I love it. So I'm like a granddad who's just figured out how to, fiddle with a stream, So don't leave granddad at the computer too long. He might just start going crazy. He might just start going mad. Okay, let's chill. So we just sat here. This is my current trade. And I guess, we can probably get a lot of inspiration from this trade and what we want to talk about. We're going to be speaking today very simply about, what makes a great strategy. So 5 things you need for a great strategy. Okay. So the first thing that I'm going to basically talk about, is your analysis. Right now, this is going to be a broad term, and as with every single video, I want you guys to, pay attention to what I'm listening to, but take notes at the same time. Because I tend to digest I tend to speak about a certain point and just maybe not go off tangents, but I just will speak about a point. I'm not going to write everything on that, on that screen. So when it comes to analysis, you don't have to have the best analysis. You don't have to have like the ICT methods, the this methods, the SMC, the ABC, the SHI. I'm not going to say the last one. method. You don't need to have the George Soros. Heck, you don't even need to have the JB Faith and Forex method. You just need to have a method that has a sound. What's the word I'm trying to think of? It's just a analysis that has a sound method. So let me just say what's not a good method. Okay, so for example, you just see a trend like this, and you say, okay, I know this is a good place to buy. I'm going to just sell by here because I saw it happen a few times. You come to the market, you don't do anything. You just say, okay, I'll do a 1, 2, 3, and then just sell. You don't have to do a 1, 2, 3, 4, 5, 6, 7, 8. You can do the 1, 2, 3, but you have to make sure that it actually is good. Like it's stuff that makes sense. So what would I suggest? I would suggest you first of all think of a strategy, think of a plan, think of something that resonates with your trading style. Don't go for something which is extremely fast-paced, high octane, maybe higher risk or maybe higher frequency, when you're much more of a guy or gal who might be like slower paced, maybe like more risk averse. So whatever you feel comfortable with, then that's what you should do. Okay, because if you're a kind of fast-paced guy, you're not going to enjoy swing trading very much. Likewise, if you're a more patient person and would rather wait it out a little bit, high frequency 1 minute trading is not really going to be the strategy for you. So figure out something that resonates well with yourself, and when you have figured that out, then go and just make a solid, find a strategy that is based on solid analysis. We're not talking about doing the big old fat shebang and having a million things on our charts, but it just has to be simple. For example, let's say you want to just do 15-minute only. Build a strategy that makes sense, takes into consideration trends, takes into consideration consolidations, takes into consideration maybe overextensions, reversals, whatever you want to do. If that's what you want to do, then go for it. So make sure that the analysis is it makes sense. It doesn't have to be the best. It doesn't have to incorporate 100 time frames. If you just want to do 15-minute by itself, that can work. If you want to do 1 minute by itself, that can work. But make sure that the analysis, okay, it works, it's consistent, and it's easy to follow. I'll say that again. Make sure that it works. Make sure that it's consistent, meaning that whenever you backtest something, don't say this is my entry model, and then halfway through you start taking trades like this, okay? If that's your entry model, if this is like the only way that you take trades, for example, then keep your entry to this. If you say, well, this is one of my entry models, I have another entry model which is like this, for example, taking a sell by there, or maybe I, set my stop order above by here, but let price do its thing, then keep it as it is. Make sure that it's consistent, it's simple, and that it works. Okay. Number 2, to be fair, okay, fine. So I guess we're going to talk about a bunch of different things, because that analysis is kind of like, your analysis is pretty much everything, right? But that's not really the case. Okay, so maybe I should kind of switch this up a little bit. Your analysis is going to be focused on like how you see the market. Are you going to see the market from like a 1 minute perspective? You just take the 1 minute. Are you going to go 15 minute, 1 minute, 1 hour, 5 minute, 4 hour, 1 hour, 15 minute like I do, or daily and 1 hour, daily, whatever you want to do? Whatever is the general premise of the strategy, that's going to sort of be in your analysis. Okay, that's going to kind of be like the backbone. Okay, maybe we should have sort of switched that up, because the next point that I wanted to speak about was stop loss placement. Okay, so everything in this, we're basically all going to tie this whole thing together. Okay, this is all going to be included in your strategy, right? So your analysis, I guess, call it like the backbone of your strategy, the idea of your strategy. Maybe this is what you do in the morning. You're plotting, you're planning. There's no entries. There's nothing yet. It's just your analysis. Your analysis is there to sort of set you up for the day. Okay, so for me, I guess that's actually different with everybody. Maybe your analysis, you do it constantly throughout the day. But for me, of course, my analysis tends to change throughout the day. But for me, I tend to do 1, 2, 3, 4, 5, 6, boom, whatever that's on the chart, whatever it is, that set me up for the morning. I sit back, right? For example, let's say I see the market something like this. I can see that I'm by here. I can see that. I can see that. I'm just kind of waiting and seeing. So if I see market, going like this, I might say, okay, boom, take a trade. Okay, stop loss. Okay, the next thing is to take a sell by there, right? something like this. Do you get what I'm saying? I'm flowing with it, but that whole backbone, all that analysis was all done in the morning. Okay, so that was like the foundation for the day. Stop loss placement is really important. You always want to put your stop loss behind structure. See, look at this, right? This trade, it could go ahead and do that. It could go ahead and do that, but ideally, you know, well, not ideally, what's really awesome about this trade, in my opinion, and with loads of my trades, look at that. Okay, just look at that. Look what happened. The stop loss placement is perfect on every single trade. Why? Because I put it behind structure, right? I incorporate the structure, I incorporate the wicks, and if I had drawn my stop loss zone something like this, I would have been taken out. And do you know what the crazy thing is that I adjusted this in the middle. It wasn't initially like that. Before I took the trade, it was something like this. My stop loss is always, I draw my key level, then I put my stop loss, 110 points on gold above. And look at that. If I had drawn my key level like this, it would have got taken out. But because I included those wicks, right, then it didn't get taken out. Right? So it's a really good place to put, you know, your stop loss always behind structure. How does this look? Well, you could, for example, see a retest level like this, which is pretty much the inverse of what I did. You can put your stop loss by there. You can put your stop loss maybe below by here, if that suits you better, right? Your trade gets triggered or whatever, and your stop loss is by there. That's okay. But what you definitely don't do is, for example, take your trade by here and put your stop loss by there. So your stop loss should always be in a place where price has the potential to move. So let's say this is your key level. Let's say this is it right by here. Okay. You've got your wicks. Wicks will always tell you, right, where price is likely to sort of react from. Okay. So if you draw your key level encompassing all of these wicks, put your stop loss above it, you know, or below it, whichever direction you're at. So your stop loss placement is going to be really, really important. It's really, really crucial. But likewise, you don't want to put your stop loss like somewhere like there. Come on, man, you can just reduce it, bro. Like, put your stop loss by there is okay. Okay, you don't want to go like there. You want to put it a decent distance away. I always tend to go for like a certain number away from the key level. So let's say this is how, if I draw the key level like this, for whatever reason, you know, I will put my stop loss, you know, a set number. I'll, you know, go to the level like this. Maybe some people want to do like 50, 200 or whatever. I'll just, you know, I always do 110. I think it's 110 points. I just add 11 to these two numbers. So this would be 79. Boom. And that's what I do. I do that for every single one. But I establish this zone could be different. Some zones could be like this. Some zones it could be like this. Or some zones it's like that. And that's exactly what I did by there. So this particular stop loss placement was like this. Right? Let me just show you quickly. We had this. Right? So we had this level, price came up by here, so I'll just draw it on the side so you can kind of get an illustration. Broke above this high, which was by here. Trend defining point, which is right by there. Price broke lower, so I'm going to go ahead and take my retest from that level. So all I did is go from the wicks to the bodies. I can see if there's any wicks that need to be added. Boom, add those in. Sometimes you might get wicks that come up by here. Maybe you're going like this, going like this, going like this. If it starts to look a little bit unreasonable, I just make it look reasonable. I just kind of adjust it at that point. But I always, you know, I got a process, and that process includes those wicks. So stop loss placement is extremely important. Always put it behind structure, put it in a decent place, keep it consistent. You have to keep it consistent. There's not a if or maybe. It has to be consistent with every single trade. Don't put it too far away. Don't put it too close. Just put it in a good place. Okay. Number 3 is profit taking, right? You need to really think about how you're going to be taking out profits, and ideally you want to have this consistent. Okay, if you, for example, there's a few ways you can do this. Okay, let's say this is your trade. Okay, you took your buy by here, right? Stop loss below the level. Are you going to set a 1 to 3? Okay, are you going to set just standard 1 to 3? Okay, are you going to wait for like a break of structure before taking out profits? Are you going to wait for price to get to like a higher time frame key level and then you take out your profits? Are you going to wait for price to get to the time, you know, the higher time frame key level and then a structure shift? What are you going to do? That's got to be consistent. What do? I go for 1 to 4 every single time, and no matter what, unless there is a consolidation. So let's say I take a, you know, on the higher time frames, price is actually like this, and maybe I've bought by here, and I notice it's consolidating, I'll go ahead and take my, my trade out in this key level. Or maybe in the morning, I can see that the higher time frames are like this, and I go ahead and take a sell on the 15 minute. I'll always check that there is adequate risk to reward by there. So I never take it unless I got 1 to 2, right? So how you want to take out profits is completely up to you. But yeah, you need to make sure that's consistent. Do you want to have a trading stop loss where maybe you just let the trade do its thing? Maybe it gets to this level, you go break even, gets to this level, set it at 1 to 1, price gets to this level, set it at 1 to 2, 1 to 3, whatever it is. So make sure that you've got some kind of a system for taking out profits. You can do it at key levels, you can do it at structure shifts, you can do set 1 to 3, 1 to 2, whatever it is. That's also going to segue into 2 points, and I'll talk about them individually. One of them is risk management, okay? And then the last point is going to be risk to reward, okay? So we'll kind of speak about these two things individually, right? What color should we go for? Let's go for a nice let's go for a nice blue. Then we'll go for a nice green. The other green we had before was a little bit too much. There we go. So risk management. So this is going to look different for everybody, but one thing that really helped me, get consistent when I was trading, when it came to like consistent profitability, one thing that really helped my psychology was, this was the model that I had. If I have, starting balance is, for example, like 20k or 200k challenge. Let's say we're in a 200k challenge. Okay, I really don't want it. I really don't want this 200k to blow. Okay, I would always get funny when price was whenever I get into a little bit of drawdown. Okay, I get into a little bit of drawdown, start getting a little bit frustrated because I always started out my risk with 1%, right? So if you're going to start out your risk at 1%, what happens when you get to, for example, 3 losses in drawdown? Okay, so now you're down 3%. Well, what my mentor told me was to just drop your risk to half, because you now need to take another 4 losing trades in a row for price to get to -5. And I thought to myself, okay, well, what if that happened? He said, well, drop it down to half again, so 0.25 risk. You need to take like 10 or whatever trades before you get, probably more trades in a row before you hit 10%. And what happens, when you drop your risk, once you get to 3%, up it back again to 0.5. And then once you go from 3% up to break even, then you reduce, you up the risk back to 1%. And when I thought about this, I was like, wow, that's actually like, that really gave me like a lot of peace, because I was like, all this is now is a game of just waiting, and I realized I'd built up the emotional courage, I'd built up the emotional strength. I thought to myself, I know what to do, I know how to execute. And golly, when I think about the first 100k that I passed, wow, I'm getting emotional thinking about it. I was just like, I had some good conditions, to be fair, which we all kind of need if we want to get like a nice clean run, from like starting balance to starting balance to passing the challenge. We all need that. But that just gave me a lot of peace, just to kind of relax and just know that it's going to be a time thing. So you just sit back, relax, and boom. But how else could you go about risk management? Well, you can do what I do currently. I start off at 0.3% risk. I get to around, say, 3%, 4%, start upping it, and then I just basically up it as I go up and down. If I increase my risk, if I get to like, say, 5% and I'm trading like, 1% risk now, for example, I don't drop the risk if I go back into drawdown. I just keep it as it is, because I know I'm not going to lose 15 trades in a row. I know that's not going to happen, right? I know I said 5 things, but I'm going to give you a juicy little bit of encouragement. I'm going to tell you some more stuff you can add to this, right? Because I'm good like that. I care about my traders, I care about my friends, so I'm going to give you more stuff you can think about when it comes to your strategy, right? So your risk management is going to be really crucial, because you're going to have bad times in the market. You are going to have times where you're going to make errors, you're going to go into drawdown, and you need to be able to know how to protect yourself from those things, right? How you want to do that is completely up to you. Do you want to start out at 1%, 0.5%? Do you want to drop your risk? Do you want to, up your risk? It's completely up to you. But I would just say to you guys that when it comes to challenges, that's completely your prerogative on what you want to do. But for me, I trade my challenges at 1%. As I get, more funding and I can blow more money on challenges, I might start risking 2%, because really, I don't care about the challenges. I care about the funded accounts. I don't want to lose those. So I keep my risk smaller, if that makes sense. And if you keep your risk small, then you just know that you're going to be protected. And that's what I like. I like to know that I'm protected. So I don't focus more on the reward, but I focus a lot more on risk. But, everyone's got a different appetite for risk, and that's pretty much what I enjoy, because I know that I can make mistakes. I know that there can be things that could happen. I could have slippage, I could have whatever. So keep it small, get into that nice profit, then I up the risk. Okay? But then you also notice the conditions, right? If the conditions are great, up it a little bit more, maybe take more trades. If the conditions are not so great, then, maybe hold back on the risk. But another thing to add to this risk management is how many trades you're taking a day. Okay? Have a limit. I do minus 3R, boom, I'm done. 3 losers, I'm done, right? But that works for me because I've got 4R wins. So if I take 2 losses and then I get a 4R win, I'm up 2R. Do you see what I'm saying? If you take 3R wins and you lose 3R, right? Or you lose 2R, you're going to be up 1R. It's up to you. What do you want to do? If you take 2R profit, you might not want to have 3R loss for a day, because if you take 2 losses, maybe your third will be going break even. If that's what you want to do, that's totally up to you. But have a limit. This comes under risk management. Okay, have a limit to how many trades you're taking, right? I do minus 3R and that's it. Risk to reward. Now, this is really, really important. Okay, this kind of ties in your profit taking and your risk management. Okay, the two things kind of align at once. So how do you want to, what risk to reward do you want to go for? We obviously need a positive risk to reward. I know some traders, they don't have positive risk to reward and it works out for them. I guess that's one way to do trading. I can see how it would work, but for me, that sounds really stressful, and I'd rather just have peace of mind knowing that my winners are going to always make more than my losses. So like I said, if I take 2 losses in the day, I got 1 more bullet and I'm going to be up 2R, right? If I have 3 winning days in a row, I've made 12R, right? It takes me a long I don't think I can. There's been a few times where I've taken loads of losses in a row, but it happens hardly ever happens. Maybe like once or twice a year, you're going that really bad streak. But it happens. It definitely happens. So if you have a positive risk to reward, it makes your trading so much easier. Maybe you want to go for 1-to-1. It's up to you, but have a positive risk to reward. Heck, why not even go for 1-to-5 targets? If it works out and it's based off a sound teaching, then sure. But if you're finding out that your 1-to-5 trades are always reversing, maybe you want to look into your strategy a little bit. Maybe you want to be able to take out partials as you're getting, into those levels. It's completely up to you. But this is just something that you got to think about. And, risk to reward is extremely important. It's, for me, honestly, the reason why I make money in trading, because of my risk to reward. I also notice when the conditions are really good, I may take another trade. Like I've it happened to me the other week. Like I had a really good run for like 2 weeks. I noticed in the second week that I was like, my strategy is doing really well. I could see the conditions were great. Like I took this one trade, the market had the volume. I had the volume for the day. So price had pumped and I took a sell and it won. And I was like, wow, awesome. So I've made like almost 8R in a single day. But that only came because I knew I was in good trading conditions and the day that I had was good and I was in profit. So I managed the risk to reward that way. It wasn't just in the trade. I thought to myself, I was already up for the week. I was already up for the day. The conditions looked great. It was fantastic. Boom. However, I'm not going to think like that when the conditions are kind of poopy, right? Maybe for that one particular day, I don't take any more than 4R wins, but hypothetically, let's say I used to trade a strategy where I was just, I was stacking positions and sometimes I'd have like 8R win in a day. At that point, I have potential to take another trade. What's 1R loss? Okay, I'll go home for 7R. Big whoop. It's not a big deal, is it? That's still amazing. So that's how you can judge risk to reward as well. It's not just in the trades, it's also the conditions of the market. And that's something that if you don't really feel confident in, don't worry about it. You don't need to worry about that. That will just come with experience. Okay. The last thing that I kind of want to mention, which is the big thing, is going to be something in there which is there's going to be 2 things I'm going to tell you. Number 1 is something in there that points to psychology, right? Something in there that might be some tips. It might be some words of encouragement. It might be something just to tell you that you're doing a great job, right? Maybe it's something to remind you of certain things, whatever it is, because your psychology is going to be like the number 1 thing when it comes to this whole business. The number one thing in this whole game, if your psychology is really bad and you can't, oops, daisy. If your psychology is really bad, then, there we go. Good luck making any money, dude. It's just not going to happen for you, So your psychology is really important. Have some tips in there, right? Write some positive words to yourself. I used to have things on my wall. I wish I could show you. Maybe I got some photos on my phone. I could show you the things I used to keep in front of me. I filled my wall with stuff, words of encouragement, focus. One of the things I had was focus on taking the same trade 10,000 times. Another thing I had was, in trading, the person who loses the best wins. I had loads of stuff on there just to encourage me. I had a massive sheet which was saying, even though you're in drawdown, even though you've got this, even though you got this, even though you got this, 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 you're still being consistent. You're still executing. This is why it's only the 10% win. So something in there that's going to help you with psychology is going to be massive. And then the last point is to have checklists, I guess, written approach, and have checklists. This is something for me that I used to have them when I first came in the game, but for me now more than ever, I'm using them, because I've found since January, I've made a few errors. I'm actually behind on my results. I would have actually been up. I think I'm down, not that I'm in drawdown by 5%, but I could have had 5R extra or more, really, to be honest with you. And that wouldn't have happened if I had those checklists. But this is what we do. We live and learn. And now I'm sharing that information to you. So having a checklist is really important because, guys, I'm telling you, consistently profitable trading is extremely difficult. Okay, not only is it hard to build the strategy, right, to test the strategy is really hard, then it's the psychology, and then it's the task of doing this day in, day out, trying to do it as perfectly as you can. You're going to have errors. You're an imperfect human being, and this is why it's so important to have these checklists, because you are going to save yourself from yourself. And for me, it's important. It's extremely important, right? I always try and advocate that you need to trade as perfectly as you can. No, you're probably not going to trade perfectly, and I'm probably going to learn by the end of this year, because I'm telling you guys, this is going to be the first year where I've just gone literally zero deviations of any strategy, right? And just going from January to December, and it's going to be a fantastic learning process. But I think I'm going to look back and be like, I don't think I need to be 100% perfect, but I definitely need to strive for perfection. I still think, I don't think I know you can be consistently profitable, even if you make mistakes. But if you're making mistakes a lot and that's holding you back, then we've got to think about it. But that's why the checklists are there, to stop you from being a donut, right? So guys, if you have a great strategy which has an amazing thought process behind it, and it works and it's tested, amazing. You've got a strategy which focuses on good stop loss placement, consistent profit taking, good risk management, good risk to reward, psychology, and you have checklists, I can't see how you could go wrong. Honestly, you just focus on these factors alone, then you will do very, very well for yourself. Take it from someone who is telling you all these things, because I do all of these things and it works out for me. And anything that I do learn, you'll be the first one to know about it. Heed to this, and I'm pretty sure you'll do fantastically well. All right, guys. Well, nice and easy. I really actually way prefer just having these sessions where I just sort of speak about things rather than going through all this sort of strategy stuff. I mean, I love talking about the strategies, but I've been thinking what to include, dude. There's so much that I've got into. I pretty much given my whole brain on trading. But I know there's a lot of things to go into. I know one of my subscribers, DK, I love you, dude, has asked me about SMC. Guys, I don't trade no SMC. I don't trade no ICT, no FEG, order blocks, no this, no unicorn patterns, no turtle soup, no none of that. I just trade these simple price action and market structure, right? And I think probably my biggest asset to you guys is the fact that, I can tell you where to go in trading. If it comes to strategy, just tell me what you want to see. Anything you want to see, I can sort of talk about it, provided that it's in line with the stuff that I teach. So go and watch these videos. If there's anything that's not making sense, just let me know. And if there's anything psychology based you want me to talk about, let me know. But yeah, I obviously can't help with the stuff that I need to go and learn myself. I'm going to just show you the strategies and the techniques and all the things that I know. But if there's anything in that, please let me know. Send me an email. It's in the about section of my channel. And guys, thank you so much for watching. Hope that was insightful. I know that if you really heed to all of those things that I put in there, you're going to have a fantastic strategy. You're going to have times where, things aren't going to make sense to you in the market. There are going to be times where you wish you could have done, maybe you should have done this and done that. But I just want to tell you, if you've tested something and it truly works and you've got enough data to show that it works, don't think too much about what you could have done. This guy's making more money. If only I did this, then I would have had a win today. Or if I did that, I would have saved myself from losses. That's okay to have if you're learning, but at some point you got to stop yourself in your tracks and know that there's never going to be perfection. You're never going to have that strategy. And let me tell you something, even if you have the easiest, most simple strategy in the world, it'll provide really good results for you. Most people, they change because they can't handle the pain that the market gives them. Like for me, I'm a very efficiency-based guy. It's I can't see myself taking this many losses. I can't see myself getting taken out before the move happens. Guys, it's gonna happen. It's gonna happen. Every single strategy is gonna happen. But think about this logically. If you want to have consistent results in trading, you need to have something that works, and then you need to execute it consistently. That's the only way. Every strategy is gonna have losses. Every strategy is gonna have wins. Every strategy is gonna have losing periods. Every strategy is gonna have winning periods. Every strategy is gonna have WTF moments, and every strategy is going to have that OMG moment, okay? It's just every strategy is going to have it, but you're never going to get those moments if you keep on chopping and changing. So focus on those and you'll do very well for yourself. And guys, in terms of being a Christian, all we got to do is follow the Lord. If we follow the Lord, put our trust in him, trust me, everything will be okay. So guys, thank you so much for watching. Drop me a like, comment, subscribe, all that good stuff. Tell me what I enjoyed. Tell me what you didn't enjoy. Tell me what I could have done differently. If there's any criticism, please let me know. Let me what you want to see in a future video. But guys, thank you so much for watching. Have an amazing day. Again, any questions, just ping me an email, which is in the about section of the channel. So yeah, enough with that. I want to go ahead now, get to bed. I love you guys. Have an amazing day. Bye-bye for now.